This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome back, value investors. So I think you all know what I'm going to talk about this week. We've had a lot of news out of Berkshire Hathaway, and some of it is surprising, especially for those of us who've been following along on Berkshire Hathaway and Warren Buffett for many, many years. Some people even for decades. So I'm sure most of you know he sold a big chunk of Apple. He started selling in the first quarter. We already knew about those sales because he talked about it at the annual meeting, which was in early May of 2024. But we just found out in the second quarter earnings report that he has sold 50% of his Apple position now. And so that was about $90 billion now in cash has gone into the cash position. And that's total with the first quarter and the second quarter sales. And we don't know, is he selling more in the third quarter? His position is under 5% ownership of Apple. So he doesn't have to disclose certain of these sales until, 45 days after the end of the quarter, like any other position. And we just started the third quarter. So we have a couple months still to find out what is going on with the rest of that position. I do feel like a lot of people think like, oh, he's done now. He's gotten down to, half of his position and then he's done. But is he? We don't know. And he didn't do his normal customary types of interviews after reporting the earnings report. Many years he would have either gone on live on to CNBC with Becky Quick or even just called in to CNBC to give some color on what is going on with the Berkshire business. But that didn't happen. So we are kind of in the dark. The only other thing we do know that's going on is that Bank of America is being sold. I'm not sure how many days now that's been going on, but a lot here in July and August of 2024. Those shares are being sold in like smaller increments. But still, this is the first kind of major selling in the Bank of America position, which is one of Berkshire's largest positions as well. And now has moved up a notch after the selling of so much of the Apple, although Apple still remains quite enormous. I'd have to go in and see. I think it is still the largest position, but we don't know. We're not sure how much else of selling is going on in that position, as I just mentioned. So that's a lot of selling. And if you remember, we've talked about it here, even on this podcast, that the Buffett view on sales has always been the time to sell is never. Right? You don't get rid of a winning position, a company you still believe in that is still something you want to be an owner of, but he's taken a different tactic suddenly. And so there's all these theories going on out there about, why he's doing this and, oh, he's cashing in gains. Oh, he timed the top. Oh, he's hoarding all this cash because he knows that the stock market is topping and that it's, going to crash down and he's going to be able to get in there and get all these deals. Well, when has Buffett ever market timed? He never has. In fact, he doesn't believe in it. And he said many times over the years that market timing, even his own, is terrible. Remember when the stock market was really plunging and selling off in late 2008? He did come out with the New York Times op-ed saying that to buy American, that he was buying stocks then. But he does mention in the op-ed, if you go back and read it, it was in the New York Times. Again, you can still find it on the internet. And I do recommend checking it out and reading it because it's very calming in the times of panic, really. But if you go back, he does talk about how even he was admitting in the end, late 2008, that he might be too early in his buying of stocks then, and that he's never been good at market timing and nobody is really good at it, but that he knows in the years to come that the American economy and these companies in particular were going to end up growing their earnings and growing their revenue. At some point, the worst days would be over and you would see a return to growth. And he says something about like, in 10 years or 20 years, he can guarantee that the U.S. economy was going to be bigger than it was at that time in 2008. And that's what you're buying. You're buying those future revenues and earnings. You're buying the future GDP growth because the American economy hadn't let him down in the prior 70 to 100 years, or now 94 years of his life. So he was making the bet on America. That's why the op-ed was titled Buy American. And although he wasn't saying his market timing was necessarily going to be at the lows or at the cheapest, and that tough days weren't still to come, they were, it turns out. We didn't see the lows until March 2009. So he was a good number of months ahead of buying. But that's why I'm bringing this up, because for everyone who's saying he's market timing now is seems pretty crazy. Seems like that is not what he's doing. And so since he hasn't spoken up about what all this trade means, what he's going to do with the $277 billion in cash that's sitting there, other than put it into treasuries, so you are getting 4 to 5% or whatever he's able to get on the treasuries, then we really don't know what awaits Berkshire Hathaway. But this podcast is titled Lessons from some of his stock sales, and there are still lessons that we can take from what is going on. So first of all, let's start with Apple. What's the biggest lesson here on the sale part? Well, he bought this in 2016. It was his best trade ever. You could argue, but I think you could actually argue that on the equity side, it was the best trade he's done in his career. And it has taken over the equity portfolio. At one point, it was 50% of the equity portfolio and now much lower. But that's what happens when you get a big winner. It can run so well during that time that it overwhelms your portfolio. So there's nothing wrong with taking some profit off. And over the years, he actually has sold some parts of this investment, mainly to get it down a little bit below the 50% mark in the portfolio, because it was starting to overtake everything else. And I don't think he wanted it to be 60 or 70% of the portfolio. So he would sell like 2 or 3% of it here and there to get it in line. And there's nothing wrong with doing the same in your own portfolio. So maybe the Mag 7 have become this huge percentage part of your portfolio. And that's a little bit risky, right? To have so much concentrated into very few holdings. So there's nothing wrong with taking a little bit off the top, or even in this case, really cashing in a big part of it and going down, cashing in 50%. Now, when we had the kind of topping and sell-off in 2022 in a lot of the growth names, I myself, in my own personal portfolio, decided to lighten up on a lot of my big winning growth stocks. So I did sell some of those, and I sold quite a big percentage of those to lock in those gains. And those have since rallied and gone back up to new highs, but I have no regrets on lightening my exposure to some of those companies, because I still kept a small position in them to keep riding the wave if the wave kept going. And it did. So I'm up on my remaining positions, and I'm quite pleased at that. And I'm quite pleased at where I deployed the money that I got from the profit of, cashing in some of my big gains there. So while Buffett has always said the time to sell is never, he has not always followed through with that. And there are reasons why you would, like in his case, where, or many of yours, where the position has just gotten too big and you need to rebalance it. So rebalancing is a good lesson. Frankly, just taking some profits when they're this big is also a good lesson, right? There's nothing wrong, again, with cashing in on some of those profits. And Apple has been one of the big performers of the last decade, even of the last 5 years. I'm looking it up right now to kind of see like what did it do versus, say, the S&P 500, because that's always kind of the key index a lot of people, compare themselves with. And so I know it's been a good performer. That's why everybody is kind of shocked at what he's managed to do. So Apple over the 5-year stack is up 324% now. S&P 500 up 79%. So if you're going to lighten some, even if you've just owned it for 5 years and he's owned it longer than that, even if it's just 5, that's pretty impressive, gains. And again, sometimes you do want to cash in. So we have rebalancing, and we have cashing in profits. And then we don't know if maybe some other things have come into play. We don't know if he's selling because it's gotten too expensive. That is a factor, but Buffett has never done that in the past. He has owned stocks sometimes for 20 years. The valuations have gone all over the place on many of the stocks he has owned. He's never sold those, including in his own portfolio right now. He owns Visa and MasterCard. He bought them in 2011. He's never sold any of it. And those were trading as high as 45 times their PEs in 2021 and into 2022. They've come way down, but if you're going to sell a stock, I think, and you're a value investor, you're going to sell when it's at all-time highs and it's trading at 45 times, right? If you're selling on valuation alone. And he didn't touch those. And Apple never got even that expensive. So I don't think it's about valuations, although we won't know until he says, but that could come into play with some of you. What if you own Eli Lilly right now and you bought it on the cheap and now it's trading at 70 times forward earnings? That might make you nervous as a value investor, and you might want to lighten up on that position because it's done what you wanted it to do. You bought it cheap. It's now expensive. You prefer to own cheap stocks if you're a value investor, but it's not that. So maybe you do cut your position down. Again, nothing wrong with cashing in on some of these big gains like Eli Lilly also has. So valuations could come into it. But for him, I don't think that's what it is. But for you and I, it might be a reason to sell and get out. And then there is just the change in the business. What is changing at Apple? Tim Cook is still the CEO, but for how much longer? What if Tim Cook decides to retire? We know that is coming down the pike. And then you have new management in. Will they run the company the same way? Will the focus be on the same types of things? We have some litigation going on the antitrust side and things in that respect, but that's been going on for many years with all of these big tech, the Mag 7 companies for the most part. And so that might not be a reason you might want to get out. But for some companies, it might be. If they're going to get bogged down in litigation for years and years, you might not want to own that company because there are costs associated with that, right? Plus also the time and energy of management focusing on these other things instead of actually coming up with new products and running the business and growing the business. So, but these are all things I've told every long-term investor you need to think about is what's going on with management. Is the company going in the direction it was when you originally bought it? Is it the same company? Because a lot can change, as we know. So that could be an issue, but I'm not sure. We don't know again if that is an issue with Buffett. All we know from the first quarter sales, I think, is what he said, that it was for tax purposes and kind of like, don't worry, but then he kept selling. So we await some kind of word. So we have rebalancing. You're just cashing in profits. Maybe it was the valuations. Maybe management has changed and you need to sell. So these are some of the lessons from this Apple sales. And also, I want to add a fifth one in. Maybe your goals have changed, right? Buffett is going to turn 94 at the end of August 2024. That may factor into what he is seeing and doing with Berkshire Hathaway, the company, and its equity portfolio. And for you in your own individual portfolio, age and differences in your life may factor in. So you may invest slightly differently if you are on the building towards retirement part of your life. So your 30s, 40s, 50s versus I'm entering into retirement or I am retired part of your life, your 60s, 70s, 80s, and 90s. So we could be seeing part of that with these sales as well. Buffett has always taken great pride in the Apple trade and what it's done for Berkshire Hathaway. It is considered to be one of the four pillars of Berkshire. He's gushed about it in annual reports and quarterly reports and annual meetings. And it is considered, like I said, to be one of those four pillars. So maybe he wanted to be the one to wrap up this trade, now that he is going to be 94 or towards the end of his career at Berkshire. And so that may be coming into play. But again, you, for your own goals, have to think about these things. Your goal might have changed or you're at a different stage. And so you may need to make some changes in your own portfolio, some sales, change to companies that maybe perhaps pay larger dividends, so you're getting more income in your retirement. Or if you're younger, you were like, hey, I want something that's growing faster, so I'm going to sell XYZ stock, whatever it is, and get into some higher growth names. I don't need to be in the super stable value stocks right now necessarily. Nothing wrong with that. And everybody should be checking their own goals and investment, opportunities and where it's going to take them. That is a vital part of investing as well. So it's possible that Buffett is also doing the same, especially with these Apple sales. So we're going to add that to the list of lessons. Maybe we're learning from this particular sale here on Apple. Now, what about Bank of America? I feel like that's a little bit different. He's been selling off small sales of that over the course of many days. I'm trying to get like the latest numbers on it, but all I keep seeing is that he sold over $3.8 billion now worth of the stock since July 17th. And now we're into August. So that's a decent amount. It's a pretty big position in the portfolio, but you can't necessarily go and sell, huge chunks all at once. So it's these percentages. I see that it's almost 40 billion still in the portfolio. It's like 37 billion, give or take. And so Berkshire is still the bank's largest shareholder as well. That's why we know about these sales, because they have to file the regulatory filings when he's making them. And so these kind of combination of things. So should you be selling, some of your bank stocks? I actually did that podcast only a couple of weeks ago about what Buffett stocks you should be buying right now. And Bank of America was on it. And then suddenly, like literally days later, he starts selling out of there. But Bank of America is still cheap here. So we really don't know why he's selling out of this one. He's owned it all these years. And so it seems, this could be a rebalancing. This could be he wants a little bit of the cash profits. The stock has risen back up to a nice sales point, and he started selling right when it was at like a 52-week high again. And so a lot of people are like, oh, he's market timing again. But Buffett doesn't really tend to do that well, but maybe he tried here and did try to get out with the shares at those new highs. Either way, the stock is pretty cheap here. And when I talked about it on the other podcast, it had a price to book of like 1.15 or 1.25 is what it was. And for banks, you want to buy a price to book when it's around 1, and you want to sell when it gets to 2. That's considered to be expensive for a bank. But it was at 1.25, so it was cheap. That's why I included it in that podcast. But now, after the little sell-off, it has had a sell-off here in August, along with everything else. It's down to 1.05, I think now. It's getting closer to the 1 now. So it's cheaper than ever. And it doesn't really make sense of why you'd be selling it here unless for some of these other reasons. His goals have changed. He thinks something has changed in management or where the bank is going. It's not valuations because that's still cheap. Maybe he just wants to cash in some of the profits after all this time. And it is a big percentage now of the Berkshire equity portfolio, especially with Apple shrinking. And so maybe he just wants to rebalance. He doesn't want this much exposure to a bank, any banks. And he has sold off most of his other banks that were in the equity portfolio over the last couple of years. So any of these things could be in play, and it could be for you of lightening up on your bank stocks or any of yours if you are in a big position like this that has struggled over the last couple of years and now is, back at these highs. A lot of bank investors are, celebrating after last year's bank crisis when the shares of a lot of these banks did get spiked down to new lows, or at least new multi-year lows, that we are seeing this nice rally. So I know a lot of people cashing in now because they don't trust the banks. They don't trust that this is going to hold. Hasn't really held for the last decade, any of these rallies. So they're getting out. But again, Buffett usually doesn't try to market time, but he is doing something with this particular holding. And year to date, now Bank of America up 12%, the S&P 500 up 10.5. So it is still beating the S&P 500. Over the 5-year stack, however, it's up only 31%, S&P 500 up 79. So it has lagged. None of this includes the dividends, which it's now paying again. And you do get a decent dividend with Bank of America now to ease some of your pain. So that'll go into some of your returns. It is yielding 2.6% right now. So that's not terrible. It's not the best out of the banks, but at least it's something. So again, you have to go through all of your checklists when you're deciding what to do with the stock. But Buffett has apparently gone through some kind of checklist, and he is selling a little bit of this one, not as much as Apple, but still it's interesting nevertheless because neither of these has been sold in a long time. So to see these big sales and like every day being sold for Bank of America, it was at least almost 2 weeks in a row it was being sold off, is a little bit shocking. Also, another lesson you could learn from some of this is you don't have to sell off all at once. Now, Buffett has to sell these smaller positions because he does have such a big, overwhelming position, and it would push the shares down if he tries to, get out in like some massive sale. So, and you don't want to create a panic in a stock or anything like that. So he does have to sell, Bank of America in these smaller positions every day to get a decent amount of it sold. But you can do the same, especially now that we aren't really being charged for any of our trades. Used to be you would have just done one sale because you didn't want the expenses of selling off. But now that you can do it pretty cheaply or almost for free for the actual trade, it doesn't matter if you decide to dollar cost average on the sales side, the same way you can dollar cost average when you're buying the stock. So keep that in mind on any of these that, we have some advantages by being small that Buffett doesn't have as well, that he has some of these restrictions. Also, I wouldn't read too much into what's going on in his portfolio because remember, he is really restricted on what he can do now simply because of the size of Berkshire Hathaway. I mean, you're talking about billions and billions of dollars. He now has $277 billion in cash sitting there. You could almost not even spend all that money. And it's unlikely so far, he hasn't really spent much of it at all. He's been buying back a little bit of shares for Berkshire Hathaway, but last quarter, he only bought back $345 million of the shares. And the shares aren't super liquid, either the A shares or really the B shares. So it's hard for him to buy back big amounts of even that. So all these things add up for Buffett's problems in investing now. They're just too big, but you and I are not too big. We can still buy the small cap companies. We can buy both the stock and, we're not going to buy it outright, but we can buy the stock and even like micro caps, companies that are trading at 300 million market cap or 400 million market cap or even smaller. And so that gives us an advantage. Buffett does lament that he can't really buy any of the small caps anymore. He knows small cap value is where it's at. And he loved buying some companies that were relatively unknown, but were cheap on the street and seeing them grow into something great and terrific and making money while doing it. But we still can do that. So deploy the Zacks rank if you're looking for those small caps companies and use the Zacks rank to try to find top quality companies where the earnings estimates are on the rise. Look for some of that growth because the small caps do have it. And I know we had a mini small cap rally here in 2024. It's kind of been wiped out a little bit right now here in August, but I feel like it's going to come back again. And so you might want to be in some of those small cap stocks. And I've talked about them on recent podcasts because small cap value is interesting once again. So be sure to be in some of those. And so let's wind it down. What are the lessons from his stock sales? Well, we know some for our own portfolios. So we do want to keep balance in our portfolio unless we really want to take on that risk and we want to go for just, the 3 or 5 position portfolio. But most people, most investors do not. They want some diversification in there and they don't want the risk of having it overweighted with one stock. So both Apple and Bank of America sales could simply be rebalancing. Then you should cash in some of your profits. You should have goals, investing goals. Maybe Buffett hit them with both Apple and Bank of America. And so he's cashing in some profits now. And after the huge gains with Apple that he has amassed, there's nothing wrong with taking some of that off the table. We are investing for the goal. It's not simply to have the big winner, have it sit in there and do nothing for us in our lives. We are trying to grow our investments so that we can live better. And for whatever your goal is, it's fine to finally reach it and cash in some of those profits. And again, a reminder, so far we know he's only cashed in 50% of Apple. You don't have to cash out completely. You can leave a small position in, or even a 50% position or more with like Bank of America. He hasn't cashed in even half of that one yet. So you can determine there are no rules and you can take off just a little bit off the top if that's what you want to do. Also, valuations. Some of this might be valuation, reasons, but unlikely with Buffett because, again, as I mentioned earlier, he has held some stocks when they become very expensive in the portfolio. He will look at other things at that point, including the growth side of the story. So I don't think it's valuation, but with some of your own holdings, it may be. It may be that, it's keeping you up at night, or you think, no, this is crazy. It's simply, a PE of 100 or, 200. It's just too expensive. It can't keep going like this. I'm going to cash it in. I'm going to get out. Or whatever with the valuations. So for us value investors, we can get a little nervous when the stock goes up to 60 times or 70 times, or, price to sales are at over 10. We get a little jittery there. That's part of being a value investor, right? So valuation may come into play and you may want to take some off the top and redeploy into some cheaper stocks. Also, keep in mind what the business is doing. I say this all the time. Just because it's in one business on one given day doesn't mean 10 years later it's still doing the same type of business. It has the same management. It's doing what you had hoped when you bought it. So remember when Buffett bought IBM all those years ago, and then he sold it, he said when he sold it that it wasn't doing what he anticipated. So that could be as well with some of these stocks, and it could be with your own holdings. And then know your own goals. Buffett has his, and hopefully we find out what they are for Berkshire Hathaway. What's his goal for all that cash? But you too have your own goals. Is it to save for a house? Is it to buy a car? Is it for retirement? Is it to buy your dream vacation home? It could be anything. It could be to save for your child's college. It could be just because you like investing. Some of us are in that category, right? But we have to have a goal. And maybe you've reached that goal. You have saved enough to buy the house now. So you are going to sell and cash it in to go complete the goal and that dream. So nothing wrong with that either. Every investor should have a goal, and that only helps you be a better investor. So keep all of those things in mind. And the stocks I did talk about, but not really in depth, but we mentioned here, obviously, Apple, AAPL, Bank of America, BAC. We mentioned MasterCard, MA, and Visa, which is just V. Those are still in the Berkshire portfolio as far as we know, and he's never sold any of those. They are very small positions in the portfolio, however. So it's not going to fit into the rebalancing or some of these other areas, but we won't know until the middle of August when the 13F filings come out again about what other sales or purchases were made in the second quarter for all of these managers. That's when we find out. So I'll be back with another show about what other moves Berkshire Hathaway might have made that they didn't tell us about in the second quarter earnings report. There might be some in there, or maybe they told us everything. We don't know. But there's never a dull moment where Berkshire Hathaway is concerned. And so while we still have Buffett with us and running Berkshire and the portfolio, We will be tuning in always, and we will be covering it here on the Value Investor Podcast. So be sure to subscribe so you don't miss a single episode. You can get us on Apple, of course. We're on Spotify. We're on Amazon Music. We're on SoundCloud along with Zach's Market Edge. So look up Zach's Market Edge on SoundCloud to get both podcasts, and we are on YouTube. We have our own YouTube channel, just Zach's Podcasts, where you'll get a bunch of our podcasts. So be sure to subscribe over there, but get us somewhere, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.